If you're a Tesla investor, then get ready for something big coming in January. Goldman Sachs just revealed a massive rally for Tesla stock in just about a month from now, and you're not going to believe what it's all about.
We've been hearing about, but they'll have one at a lower price, potentially lower price than the Ram, Silverado, and the Lightning, right? So I think we'll get some diversity in terms of battery range. And in terms of storage capacity. But to Phil's point earlier, I don't know if this is going to be a work truck. I think it's going to be a lifestyle truck. It's probably going to be more a range,
vanity truck,
I would say.
Yeah.
Right, potentially. But there's a lot of people who drive those. I tell you, my brother lived in Texas.
Kelly,
and there's a ton of pickup trucks.
How many car seats can it fit? Because I would
just throw them in the back. It's fine.
It's bulletproof. What
That's
could
how
happen?
we grew up, man.
Yeah. I'm getting a little sick of the Odyssey, Tom. No offense to Honda. So you talked about how much of your valuation for Tesla is about autonomy and software and all of that going forward. Do we need to read anything into his comments, his disappointment with what's been going on at OpenAI?
No, I don't think so. I mean, it's the other thing I got out of reading the Isaacson book is there's a lot of Elon speak that you just have to kind of not listen to, perhaps. Really, ultimately, people should test out FSD beta, and I personally believe it's the best consumer product since the iPhone. It is so amazing.
Bets on rate cuts are rising and the bond market is moving in tandem. Treasuries rallying and at the fastest clip since 2008. The momentum helped by some dovish Fed speak in recent days and progress on inflation, despite the core number remaining somewhat sticky. Our next guest has been overweight equities all year long, and he says it wasn't a popular call at all, but they remain there. Joining us now, we've got Ryan Dietrich, Carson Group's chief market strategist, here live in living color with us. Yes. Ryan, great to see you in person today.
This is a great studio. I'm glad to be here, guys.
Appreciate it. We put a lot of work into it here. Look, you put a lot of work into these calls over the course of this year. Some of them unpopular at the time that you made them. Why do you continue to stick by them? And at what point do you kind of reverse or change course?
Yeah, Brad, you think about it, a month ago right now, we were in a correction. It felt like the end of the world. Yet, if we look at really the consumer, I mean, I know you guys have talked about it, the consumer, we're still making 200,000 jobs every month. Productivity is strong. We're looking at all-time record high earnings next year. Things aren't perfect. Delinquencies are creeping up. We're aware of some of the cracks that are out there. But just overall, it still makes sense to us when you look at the overall picture of a market that simply is seeing more participation, right? We all know 7 stocks were going up. Kind of disagreed about that, but now we're seeing way more participation just in the last 4 weeks or so. So again, we get into some of the more things we see, but we've been overweight since December last year. People hated that when we did it. We're still there. We still think next year the bull market's here, and there's probably not going to be a recession either.
Ryan,
Tesla is one of the most innovative and disruptive companies in the world, and it's also one of the most risky and uncertain. Tesla stock can soar or plummet in a matter of days, depending on the news, the rumors, and the mood of the market. That's just the way things are. Today, we're going to explore a very interesting prediction from Goldman Sachs, as well as a potential valuation for Tesla's AI projects, particularly FSD and FSD licensing. This video is going to help you navigate the Tesla stock rollercoaster, giving you more confidence in the stock and Tesla's future potential. It's also going to help you avoid common pitfalls and mistakes that many investors make with their Tesla investment. So sit back, relax, and grab some popcorn, and get ready for this journey.
In order for Tesla to sell 2.3 million units next year, mostly Model 3s and Model Ys, not the Cybertruck, people need to get re-energized and convinced to buy a Model 3 and a Model Y again. And, a car is an emotional purchase. It's all about brand. And this is how you reignite the interest and the passion of a brand. Phil was talking about 20% of pickup trucks being this lifestyle type buyer, and this fits right into that sweet spot. We only see them selling about 250,000, maybe max of these per year, and that's easily achievable at 20%.
Is that a needle mover for a company of this scale and size? It's not going to be a needle mover either way.
No, it's not going to really matter. Plus, if you guys remember, my valuation is 90% autonomy, robotaxi, and FSD, and only 10% cars and trucks. But we do need people to buy these products in the next year or two in order for the thesis to work. So I do believe it's important to re-energize the brand for people to buy Model 3s and Ys. They can put FSD on those and get people excited about autonomy. So it's indirectly important But in of itself, I don't believe it'll be that big of a financial contributor, especially for a company with a $700+ billion market cap.
Yeah, let's talk a little bit about the specifications of the truck. How does it compare in terms of size with the trucks that we're familiar with, whether it's the Dodge Ram or the F-150, F-250, the Chevy trucks, in terms of its carrying capacity and in terms of range?
Yeah, it'll depend on the trims. I know we heard of 3 trims that they have. I think the highest end will probably have higher range than those other models that we've been hearing about. But they'll have one at a lower price, potentially lower price than the Ram, Silverado, and the Lightning, right? So I think we'll get some diversity in terms of battery range. And in terms of storage capacity. But to Phil's point earlier, I don't know if this is going to be a work truck. I think it's going to be a lifestyle truck. It's probably going to be more
a
range,
vanity truck,
I would say.
Yeah.
Right. But
while being a car company, Tesla has also been making big efforts with its AI. And Goldman Sachs predicts that Tesla could successfully seize these AI opportunities, and then its market potential could become pretty substantial. The firm noted that it believes in an upside case where FSD could be $50 to $100 billion a year of revenue for Tesla's fleet by 2030, up from $1 to $3 billion per year presently. But could Goldman Sachs be right? Can Tesla really make the AI business happen like this? Let's find out. Hey guys, welcome back to Tesla Tomorrow. Elon Musk once said that AI could make Tesla the most valuable company in the world, and we think this could be pretty true. Tesla's AI strategy is pretty ambitious and visionary, and it could potentially transform the auto industry and beyond. Although Tesla's AI story is unfolding, it's going to be interesting to see how it evolves over the coming years. And when it does become a big deal, Tesla's AI potential will be reflected in its high valuation, which is based on the expectations of its future growth and profitability. So what exactly is Tesla's AI strategy, and how will it affect its valuation in the future? Keep watching to find out. But before we do, if you like this type of content, don't forget to hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla's AI strategy revolves around FSD and Dojo, the 2 main pillars. FSD is Tesla's cutting-edge driver assistance technology, which helps it to navigate vehicles along complex road systems without human intervention. And Tesla claims that FSD will eventually reach level 5 autonomy, which means the vehicle can drive itself in any condition anywhere. Its FSD beta program allows a select group of Tesla owners to experience firsthand the cutting-edge capabilities of their vehicles, gathering valuable data and insights to further enhance the software. This software is not just a key feature for Tesla customers, but it's also a potential source of revenue and profit. The automaker also envisions a robo-taxi network where owners can share their FSD-enabled vehicles with other users and earn income. Tesla estimates that each robo-taxi could generate $30,000 per year in profit, which would substantially increase the value of its vehicles and fleet. And then there's Dojo, Tesla's AI supercomputer, designed to accelerate the training of its neural networks for FSD and other applications. Tesla believes that Dojo will enable breakthroughs in various fields of AI, like computer vision, natural language processing, and reinforcement learning, and that it will also attract more AI talent to join Tesla's team and contribute to its AI vision. That being said, let's get to the numbers. Tesla's AI potential has been acknowledged by several analysts and investors who've assigned different valuations to its AI-related businesses. For instance, Cathy Wood from ARK Invest has long counted Tesla among its biggest holdings, and the central component of her bull thesis is that Tesla will be the leader in an estimated $9 trillion robotaxi market by 2030. Similarly, Goldman Sachs has recently reiterated a neutral rating and a 12-month price target of $235 for Tesla, noted that it recognizes the company's AI leadership and upside potential. Goldman Sachs estimates that FSD could generate $50 to $100 billion per year in revenue from Tesla's fleet by 2030, up from $1 to $3 billion per year currently. It also suggests that Tesla could unlock additional revenue by licensing FSD to other automakers or offering Dojo as a service. Tesla is the only company in the world with a fully AI-based general driving solution, and it is believed that in no distant time, Tesla cars will be fully autonomous. According to Goldman Sachs, their current Tesla price target reflects automakers' future potential for growing in a high-margin area, and it also affirms that Tesla's standing in a pretty strong footing to emerge as a frontrunner in AI-related tech. To shed more light on this, Goldman Sachs analyst Mark Delaney asserts that Tesla is one of the few companies in the world capable of developing and leading AI training technology. Interestingly, Tesla's FSD licensing business could grow even bigger. To emphasize the potential scale of the licensing business, Goldman Sachs estimates that Nvidia's data center segment is predicted to exceed $50 billion in revenue by 2024, while AWS is anticipated to go beyond $100 billion. As for Tesla's software-related revenue by 2030, it could be tens of billions of dollars per year and more if you add in the licensing of Dojo and selling FSD to other OEMs. It is also important to note, however, that not everyone's convinced by Tesla's AI prospects. Similarly, analysts also argue that Tesla's FSD is overhyped and underdelivered, and it faces significant technical and regulatory challenges. They also point out that Tesla's AI valuation is unjustified compared to peers, like BYD, which is the largest EV maker in China, and has also got its own AI and FSD capabilities. And while this may be true in a way, what you need to keep in mind as a Tesla investor is that one day Tesla will be able to compete with other tech giants like Google, Amazon, and Microsoft, which will have more resources and expertise in AI, and the automaker is still going to take the crown. What do you think about FSD then? And what's your valuation on Tesla? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.